Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening, as we're now on Tuesday, and this is the 2nd of May, believe it or not, 2023, 6:35 p.m. Central Time. Now, I want to remind you, if you're watching me here on YouTube, you see a Join Me button. In the mornings, you can join me in my live, well, actually, they're recorded webinars. They're live when I do them, but I record them. And you get an idea of where to buy, where to sell, what I'm thinking to do, where the stops are, how to come out of momentum trades, things of that nature. So I think you might like what you see there. If you like these, by the way, please give me a thumbs up. And remember, we do make special offerings available to you, and they're available when you click on and move your cursor over the top. You'll see a cursor and you can take advantage of things that way. So tomorrow's the big day. We get the FOMC, which is the Fed Open Market Committee, and they're going to tell us what they're going to do. The market's widely expecting 25 basis point hike. The market, as you know, the naysayers keep saying, oh, the Fed will not keep raising rates. This is it. It's one and done. And after that, a pause. Well, I think what set the morning off in shock traders was Australia tried that. The market widely expected that today, when we came in, we'd see, as we Americans woke up, that Australia had held pat again on their central bank meeting. Not what happened. They went up 25 basis points, saying that the inflation, the core of it, isn't breaking down the way they want, the speed, and it's sticky. And they have to move, and they may have to move again. I'm warning you, this could be happening in America in the same way. We have another problem, though, that is with it, and that's the debt ceiling and how that gets done. There is a playbook that the Fed has. They dug it out. I think it was 2011. Was it William English? I think it was him that devised it. And there are ways you can take defaulted instruments and give you full collateral. We've opened up the banks with the banking issue. Did anybody pay attention to what happened to PacWest Bank today at stock, down 25%? So the vultures, that's what I want to call them, the short sellers are back. They gave the JP Morgan rescue 24 hours, and then they attacked everything again in the banking system, looking for the weak links and what they can drag down. But this is about the metal market. And what the market showed us is a couple of things. As the stock market weakened, as the market thinks the dollar's not going to be able to hold up, that eventually the Fed is close to being done, what do people want to own? They're running into the gold market, which again moves strongly up. Here you are, 2025. These are numbers we haven't talked about in many, many years. When you look at the gold market, you can see that you're up 1.3% at this point. For the week, you're up $25.9. You can see that the action here, the market had based out, trying to move back to the upside. The pattern is one of a higher high and a lower low, not a trend, but what the market did is it held this triple bottom area, and I think that's pretty important. The market's back over the 18-day average of closes, which opens the door up to get back up here to the 2042 level, and that level is the upper Bollinger Band. So that's what I'm looking for to be the next resistance if the market wants to reach up and challenge another resistance point, and momentum is turned up. So bias is up. Not a trend in the sense of higher highs, higher lows. Market rejecting hitting the lower Bollinger Band and making a run potentially for the 2040 area. When I look at the gold-silver ratio, if you'll recall, you had a correction where silver lost to gold. The higher you go back in the number, it's when silver's losing to the gold. And then it hit that number, the 18-day average of closes in red, and fell back. When you look at the silver, it is caught in the narrowness of the Bollinger Bands. The top and the bottom band going just absolutely sideways here. In the copper, we have lower highs, lower lows, still in the bear camp. It is the Labor Day holiday in China, and a lot of traders, a lot of people just went on their vacations. Why not? They have been cooped up for the longest time. That could work with that a little bit, but there's something else. What's scaring traders, and I think in the copper market, is the fact that all these interest rate hikes, getting one now from the Reserve Bank of Australia, going to get one tomorrow, I'm saying that, from our bank, and then followed by the European Central Bank, and next week probably by the Bank of England, slows down economies and the demand for the copper. China still relies on the West to buy its products so that it can make things and send them on for export, and it is showing up that it is slowing down. When we look at the platinum market, you have fallen back to the neutral territory of the 18-day average. You had lost the embedded reading right over here. And as you know, I believe that when that happens, before the market typically goes up for the old high, the most recent high it made, it'll go back to that 18-day average. It most certainly did that. I don't know that palladium's got it in it being so oversold to reach down to the lower Bollinger Band. It's not trending. It has a higher high, lower and low scenario. And the U.S. dollar made a run for what number? If you take a look, it missed hitting the upper Bollinger Band by 3.5 points today. So it made a run for that, ran out of its momentum and coming back. Traders, tomorrow's going to be an exciting day. A lot of events between now and Friday are going to unfold. You probably want to see what I write about, what I talk about, how I do my research, and I want to show it to you. I write 2 market letters a day. I typically write one Monday through Thursday, one at 11:30 in the morning to noon. It'll come out in that time frame. The other before 8 p.m. at night. Then at about 5:15 in the morning, I record videos, and they'll look with black backgrounds like this in all the charts, and I walk you through the trade setups that I'm seeing. Here's the dollar risk, here's the trade, give you the ideas. You do with it as you want. I'm guiding you into what I'm seeing, and often I'll show you both the daily and the weekly charts, and on the weekend, I walk you right into the longer term trades of just the weekly charts. And we keep track of everything. So as we're doing these videos, here's the open positions, here's what you've got, away you go. If this sounds like something you'd like to try for free, heard what I just said, if you haven't tried it before, I'd like to give it to you. Move your cursor up to the top here. Free offer. Go in there, sign up for that. You can go to our website under free offers. You can call my staff. They can get you set up as well. It's going to be an exciting 72 hours. This is the time to get yourself set up. I'm Ira Epstein. Thumbs up if you would, and I will talk to you all first thing tomorrow.